stocks. Allied Blenders is what I'm starting up with. It's a thumbs up. Revenue is up about 13% at 973 crores. Above the estimates at 964 crores that came in. EBITDA is up 97.5% at 116 crores, also a beat on estimates. Margins have also jumped up pretty decently. The expectation was already 11.5%. Your margins are close to 12%. And year on year, that's an uptick from 6.6%. So a healthy number there. Net profit at 57 crores versus a loss of 4.4 crores. So a volume growth of 11% has helped. Profits have grown due to a state brand mix, so they're in more states now. Cost optimization. Their premium category is what has really pushed the numbers up about 41% year on year. It's just the growth in their premium category, which is why a thumbs up of Allied Blenders. Look out for that. Brigade is the other one that I'm looking at. Thumbs up again. Revenues up about 25% at 1,464. EBITDA up 58% at 414 crores. Again, a beat on estimates. Margins have also improved from 22.3% to 28.3%, and net profits are at 236 crores versus 73 crores. So that's also beaten estimates. The pre-sales volume, which is what everyone looks at when you see a real estate company, those volumes are up 29% to 2.19 million square feet, and the sales value is up 63%. We will be speaking with Pavitra Shankar of Brigade later in the show, and we'd like to understand what her outlook really is and what has worked this quarter. But for now, I think that stock, which has already run up a fair bit yesterday, might see some interest there. I don't know if rate-sensitive stocks overall might see some impact of Fed that could peter things out. But on its own, Brigade Enterprises is a good set of numbers. Not so much for Voltas. Thumbs down for this one. Revenues are up 18% at 3,105. EBITDA up 594% at 197. Margins of 527 basis points. Have gone from some 1% to 6.35%. Net profit at 132%. Then you're going to be wondering why we're saying it's a thumbs down. That's because the net profit has missed estimates. Revenues are in line, and their market share has slid a tad, to some extent gone to Blue Star. Projects business has grown 21%. The unitary cooling product segment, which grew 20% year on year. International projects business, projects in the UAE and Saudi Arabia, though, continue to perform well. It's the engineering segment which was facing headwinds, and the engineering segment revenue declined 16% year on year. The share of loss from Voltpec also stood at 334 million, down 10% year on year. So Voltas might see, on the face of it, numbers seem okay, but not really living up to what expectations are.
I would start with the good news first. And Hitachi Energy looks really, really good. Look at the numbers. It was up over 6% in trade yesterday. Maybe an inkling that the quarter was going to be good because revenue was up about 27%. But take a look at the expansion in the EBITDA margin. It has doubled. It is coming at 10.3% versus 5.3% in the comparable quarter. And you have the net profit, which has jumped quite considerably. It's coming at 137 crore rupees versus 23 crore rupees. Now, I was looking at the performance. It's actually gotten beaten down a fair bit as well over the course of the last 3 months, and perhaps to a certain extent some bit of clawback of gains in the recent past. So there you go, down about 25% over the last 3 months. This is something that the street will probably look at positively. SRF, it's a good number, and I'm happy to say this for a chemical company, and maybe really the corner is being turned because revenue has increased about 14.4%. The margins have come in at 17.7%, lower versus the comparable quarter, but certainly above estimates, which pegged it at 17.1%. The net profit has increased about 7% and come in at 271 crore. Once again, this is sizably above the expectations, which had pegged it at 236 odd crore rupees. What is the fine print saying, though? The chemical segment is the beat in the chemical segment rather has been driven by higher demand for refrigerant gases. We were speaking about that a short while back, maybe a couple of weeks back, and the demand is coming in from domestic OEMs. The specialty chemical segment continued to experience some overhang, though, because of inventory build-up among the agrochemical customers. But the numbers look decent. The one You want to come in on that?
Yeah, just on SRF, I think the larger reaction though on SRF will happen post the con call today.
Yes.
That's usually the template.
Yes.
So 2:30 p.m. the con call, expect some fun and games around the 3 p.m. mark for SRF.
And maybe it'll set the stage for the rest of the numbers that will come through over the course of the next couple of days.
Yeah, but you're right, Alex, because I think we've seen the fluorochemical companies yesterday, Gujarat Fluoro do well, Ami Organics do well.
Yeah.
Individual levers for each, but for SRF, the con call is so important.
Absolutely. 2:30 p.m. is what you should mark. Tata Motors is the down tick, or rather the thumbs down that I should talk about. And it's a miss on all fronts. Where do you start? This is a company that has over 70% of its revenues that are contributed by Jaguar Land Rover, and it's not a pretty picture for Jaguar Land Rover. It's a return to the black for this company, but the margins have come in much below expectations. The pain really emerges from China, where the sales are not as good as was anticipated. In fact, you have China sales down about 38% versus a comparable quarter, and the PBT down about 17% or thereabouts. There are a few other pockets that were good, however, it's not such a good number for Tata Motors overall. The net profit on a consolidated basis down about 22%, coming in at 5,451 crore rupees. The estimate had pegged it, Neeraj, at 6,435 crore. We'll be talking about this more, but those are the numbers that stood out.
Yeah, interestingly, one of the notes, I think it's Bank of America, saying that very weak quarter, but the Q4 guidance seems to probably be the saving grace for Tata Motors. So let's see if that were to happen or not. The first stock on my radar is Whirlpool of India, and not necessarily for result reasons, but much like last year, Whirlpool of India at the start of the year is saying that they want to pare down stake and interest in the company. The holding company Whirlpool Corp will sell down about 20% ownership interest in the company by mid to late 2025. I wonder if this has an overhang on the stock today. Remember the last time Whirlpool sold its stake at about 1,200 or 1,300 or thereabouts, the stock went up all the way to 2,100. So the parent knows that they are not the best identifier of when to sell, but this time around they are saying mid to late. I just think it will remain an overhang on the stock today, possibly, maybe for the near term, but today too. So Whirlpool of India is the first one on my list by virtue of this decision that the parent has given out. So keep an eye out for that. From amongst the large names, I think the brokerage notes on Bajaj Finance are very interesting. Citi, for example, is saying that they are maintaining a buy and they have hiked the target price to 9,060. Amongst everything else that they have said, I mean, driving credit cost improvements, expanding growth horizons. The last line in that note, or one of the last line that we've mentioned as a takeaway from the Citi note, is that the MD has exhibited intention of staying at Bajaj Finance and playing an active role in executing LRS strategy. This always is an overhang, whether Rajiv Jain, for how long will he stay, will he go away, etc. I mean, this one stood out for me from the Citi note. Morgan Stanley, of course, says that it's well set for a strong FY26 and the visibility of 25% plus EPS growth has improved in FY26, subject to the macro climate. So keep an eye out for Bajaj Finance. It has had an up move for sure from the lows of 6,200 a couple of quarters ago to 7,729. You know, we talk about how the markets have given up gains and stocks have not done well. If you invested in this one at the end of quarter two at 6,200, you made some serious money and safe money. So that's the second one on my list, a thumbs up if you will. And I have one more thumbs up, guys. There are lots of thumbs up today. I mean, Bansal Wire, Ask Automotive, but I've chosen Arvind Smart Spaces. Very good numbers. In line with estimates, if you will, on the revenue front, 210 crores versus 84 crores, but a strong number nevertheless. EBITDA margins at 28.3 versus 23.6. The estimates were 24%. Net profit number, 47.7 versus 9.4 crores. The estimate was 32. So beaten estimates and the corresponding quarter quite handsomely, and therefore watch out for Arvind Smart Spaces. Could be a stock that reacts in addition to the Raymonds and the Ask Automotives and the Bansal Wires and the Electra Green Techs of the world, and we'll talk about some of these a bit later on in the show. But strong numbers today. So a lot of good news from Tamanna, Alex and me on the first on the list.
Should we do a collective thumbs up?
Well, if that works.